Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Friday. It's Friday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. Here with Dennis Dick. Joel is out road tripping it today out to Syracuse with the family. So just Dennis and myself, we're going to keep you company on this Friday morning. We're going to be joined by Mark Yusko at 8:35. He is the CEO and CIO of Morgan Creek Capital Management, a hedge fund down in North Carolina. But before we get to Mark, we're going to talk about that crazy market from yesterday, all that rotation we saw. We got some movers too, Hain, WMAR, Nike, Micron. So we got a lot to get to. Looking at the S&P futures right now, we are trading up slightly from yesterday. We were able to bounce back at the end of the day there a little bit, trading at a 24.25, 25 right now. Looking at crude futures, we are trading up by a bit as well, and gold is trading pretty flat, a little lower from the close, down about 2 points from the close. Dennis, how's it going this morning?
Not too bad here, Spencer. We got a little bounce back day here today. Buy the dip working again. Look at that.
Buy the dip working again. What dips are you buying?
At least for the morning. I don't know if I'm joining the club here though, coming here and buying this dip with two hands.
Why not?
You know why? Because it was a little bit of technical damage there yesterday. I mean, we talked in the morning, and I actually at about 8:55 yesterday, we started talking, about the overall market. I made a point there. I just want to reiterate that point today because this is how I look at stuff. I look at it from an arbitrage perspective, stat perspective, and the financials were up so much yesterday morning, and the S&P futures around 8:55 were only up 3 points. I'm looking at that and I'm thinking, okay, the financials make up more than 3 points right now up on the up move in this index. That means everything else got to be down because the 500 components need to add up to where the index is. So if the index only have 3 points, the financials have 2-3% each. That's not enough. So that's telling me that the other stocks wanted to go down, and we started using that as a tell. And tech was where they took the money out of when they were putting in the financials. But then by the end of the day, it started not spilling, it wasn't a rotation so much. It was one of the first days I've seen in a long time where they were just rotating out of stocks altogether. I mean, really by mid-morning, they started selling everything across the board. There was a couple catalysts. Obviously, the one was techs were getting hit. Money was flowing out of growth and into some value. But then the issue was the TLT was down so much. So you had all of the other value stocks that follow the TLT, with the ones with the higher dividends that were getting hit as well. Check out your charts of Procter & Gamble, your charts of Coca-Cola. All those stocks opened slightly lower, and then they got hit hard because the TLT was down so much. Those stocks, believe it or not, are more correlated with the TLT. They're more correlated with bonds than they are with the SPY. So if you're looking, at as indicators in the morning, when you see the TLT, I automatically think when TLT is down that much, stocks like Procter & Gamble, stocks even like Johnson & Johnson, the utilities are your classic example, the XLU, defensive stocks like tobacco, anything that's more yield play, like where it's got a higher dividend, gets hit harder actually when the TLT is down as opposed to SPY being down. So you got to use all that stuff as indicators. So bottom line here is we had a lot of money flowing out of a lot of different sectors yesterday, pretty much all sectors except the financials. But even by the end of the day, the financials had given back half their gains as well. So, and that is concerning because that financials, the news on those banks was fantastic. I mean, you had Citigroup doubling their dividend, huge buyback, JP Morgan, Bank of America, 34 out of 35 companies basically, doing a lot of fun stuff that should be beneficial to shareholders, yet they couldn't hold on to the majority of the gains. And the other stocks were all rolling over heavy. You look at Nvidia yesterday, it lost $6. So at one time during the day, I know some of these bounced back towards the end of the day, but it was ugly. So you got to look at that and you got to analyze and say, okay, if money is starting to get a little bit nervous here, how do I analyze it going forward? So I would say, there's a lot of technical damage that was done yesterday, even on a chart like Nvidia. That needs to hold that 145 area. We breached it yesterday just briefly, but if you start getting down below that, because we got down to 144.08, we start getting back below that level again, you get concerned that, hey, maybe some of this, rally into all these momos it needs a little bit of a price correction here. And, we've had a little bit of a correction, but maybe that little bit of a correction is going to get more serious.
Okay, so let's try to assess some of this technical damage. We just did NVIDIA, sort of. You gave a key level there, but what other stocks?
Well, Apple. Check out the chart on Apple, and that stock has just been. It had the big down move here. So this is talking technicals here now. Before I was talking, fundamental. Thinking where the flow is going, and that's what I'm more of a flow trader. I like to look, where it seems like money is rotating into in the morning or in the afternoon, and and just rotating where it's going to go rotate today. I try to look at it early and try to get ahead of it. If I notice it in the pre-market money rotating out of a sector, I try to get ahead of that. And that's where I try to make my money. But check out the technical chart on Apple. So you had the big down move, the whoosh, back on June the 9th. That was NVIDIA day when Citron came out with a negative research report on NVIDIA, and we know they hit everything Momo that day. Stock was June 9th, 155 down to 146. We've had basically a period of 2.5 weeks of digestion here now. Almost 3 weeks of digestion since that time. I mean, actually, if you go June 9th, yeah, so we're at the end of the month here. So we've had digestion here. So now you think, okay, well, often what you see from a technical perspective is the move. You digest the move for a while, and then sometimes you see a continuation of the original move. If that was to happen, that would be another 9-point fall from Apple here, which would take us back to the March support of 135. That would be ugly on Apple. So, that's where I'm looking here. The longer you stay in this area, the longer the stock doesn't bounce back, makes me think we might get a continuation of that original move, which makes me bearish on a stock like Apple. Even though I own it in my investment portfolio, I'm still sticking with it. I've had Apple in there for a lot of years. But as a trade right now, I'd be more prone to be selling bounces in Apple than buying dips. And that is counter to what everything has been working in the last couple of years. So, that's one chart that I look at as concerning. The one other thing to discuss, so just for today's trading, is that we are at the end of the quarter. End of the quarter, there's always some fun moves as money managers are doing their window dressing. They're looking at, what's performed well in the quarter, and they want to put those stocks in, what hasn't performed well in the quarter. So I would expect stocks like the biotechs, which has had a pretty good month here, maybe to show a little bit more strength today, just because it's the end of the quarter. So there's a lot of factors here. So it depends on your time frame. If you're just a day trader here today, you could still see some stocks that are strong that have had a good quarter because of the potential window dressing at the end of the day. Now, if you're a swing trader and you don't care about today's action, there might be a good opportunity in some of these stocks that have had pretty good quarters. Some of the growth names that have actually been up, but money's been rotating out of them recently. Maybe they get a bounce today. We're seeing a bounce early in the morning. Maybe they get a bigger bounce. Maybe that bounce is to sell. So, that's the opportunity here that I see, when you see the end of the quarter, you get your ducks lined up like this. Maybe you get a bounce in some of those growth names that I'm talking about that might eventually be taking a hit. That might be a bounce there today to sell. So I'm looking at those as today's bounce. If it gets a little bit more because we're at the end of the quarter, maybe we have a really nice day by the end of the day. Maybe I use that to lighten up or possibly put on some shorts.
Now, if you're listening to the show yesterday, you heard our first guest, Efrem Hoffman, kind of articulate his thesis for why we're going to see a bit of a correction in July through October. This was not what he was saying. He specifically highlighted the 2040 level in the S&Ps. We didn't even get there, right? So this is not, if you're listening to the show yesterday and you're like, oh man, Efrem nailed it, this isn't what he was talking about. This is more of a rotational thing. This is, we got to 2402. He was talking about 2400. So we didn't even kiss the level he was talking about. We just missed it. So that hasn't played out. If you were following him with what he was saying and you're keeping an eye on it, this was not what he was saying. This was more. And Dennis, you agree? This is more of a rotational thing, and it was indicated by the the last 10 minutes of the show in the first half hour from 9 to 9:30. Last half hour before the open. This was all there. The signs were there.
I mean, it was profit taking yesterday, so we're not talking about, a crash. But what Efrem, was saying, and he was using a lot of, and I know some of the, people are listening probably were getting lost in some of his quantitative analysis there. And I myself, he was getting way more quantitative than I get. Like our firm is a quant firm. We keep it a little bit simpler though. Like we're looking at rotation, we're looking at relationships between stocks and stocks. But he's deriving the VIX and he's coming up with all this stuff. And and that has worked for him. Great. It's a little bit beyond how my whole strategy has always been to try to keep it a little more simple, but if that works for him and stuff, that's great. That being said, he was still coming up to a similar conclusion in a different way than I do, is that eventually one day you're going to have like this massive washout. We saw it a little bit there back on June 9th when all the money flew out of the momos. But when stocks get crowded, when trades get crowded, it usually ends badly. It's just a matter of when and at what pricing point. Because, you could be in a stock, XYZ. It could went from 100 to 200. You could say, well, this is way overdone. But then it could run to 300 and then correct down to 200. And, if you would have been shorting early, you've been early that party at 200, you wouldn't have made any money on it anyways, or you could have possibly lost as, the price continued to rise up. So just concerning is that there's been so many people rewarded for buying dips. And that has worked basically, at least in the S&P for the last 7 years. This has been, a raging bull market here. We went from S&P 666 at the bottom of the financial crisis when everybody washed out to S&P 2400 here now. So we're up, over 300%, basically in a 7-year period. It's been a pretty impressive run. Still, valuation is not crazy. It's not like it was back in the tech bubble. Like a lot of people say, oh, this is a huge bubble. And it's not like it was in the tech bubble, and we've talked about this on the show too, back in 2000 when, you had Walmart trading with a PE of 50. I mean, it's nothing like that. But is it a little bit frothy? Does it need a little bit of correction? Does it need to wash a few people out? I think it does. And these things don't just happen like, slow little leak down. Usually they happen in a wash. And that's what happened back on June 9th. Everybody was, we got to own all these stocks. We got to own NVIDIA. It's going up to 200. I got to own it right now. And that day the stock opened up at $168 and it closed that day at 145. So you're buying 168, 145. You just lost a cool 15, 20% in a matter of one day. That can happen. There was a little mini crash for NVIDIA that day. And you can thank Citron for it, whatever the catalyst was. But people wanted to take profits. And when you get something that's up from $100, in a month to 160, eventually there's going to be a day of profit taking where the stock's going to get hit pretty hard. And that's what we saw back on June 9th. I just think there's still a lot of people sitting on a lot of profits in stocks like NVIDIA. There's still a lot of people sitting on a lot of profits in stocks like, you can even say Apple. I mean, Apple's had an incredible run here really since, if you go back to the beginning of the year, it's $100. So there's still people sitting on some profits. And just when I'm seeing the setups and the stock's not coming back in, it looks like the sellers are starting to actually overpower the buyers. And that's a first. That's a first for a while here. So that just makes me a little bit more concerned. And, Efrem is setting up, saying this could just be a crash. But, I'm saying it could be, it could be a short-term, correction that could be defined as a crash if we fall 10% one day on stocks. I mean, everybody's going to say it crashed. But it sets up when trades get crowded, they usually end badly. So if you're coming in here buying, I'm just a little bit cautious here right now.
And that's one of the things he was saying. He was saying this could be a flash crash, right? It could be a one-day thing. It could be a several-day thing. And one of the things, Jimmy A brings up a good point in the chat, that Dennis, you think we can start going down without some kind of a fundamental catalyst? That's kind of one of the things I hammered Efrem about, right? I said, listen, Efrem, how can we go down? You're saying we're going to go down without a fundamental catalyst, and
we don't need a catalyst. So here is the fun thing about the stock market. When you have, and you can say, okay, well, it was Citron's note that day. But you don't always need a catalyst. When stocks get frothy, sometimes they're just trading. And the media wants a fundamental reason. They don't want to hear that trades are crowded. They don't want to hear their reason. They want to hear that somebody said something and it caused the stocks to go down. I will tell you, the media comes up with reasons for moves more than half the time. There's the reasons for the moves are simply order flow, money flowing in and out, and maybe it's just institutional money managers taking profits. But for whatever reason, it starts, a couple, stocks start going down a little bit, and then everybody just jumps on the bandwagon here. Oh, it's broken. The market's trading technical. There's a lot of technical traders, a lot of technical systems, a lot of quants that just are trading off technical indicators there. So it doesn't have to have a fundamental catalyst every time we have a big down whoosh. Often, even the financial crisis, there was. But, so there often can be a fundamental catalyst that moves stocks down. But it doesn't have to be a fundamental catalyst. It doesn't have to always be a reason. Sometimes the reason is just stocks got too frothy, stocks got overdone, and they need to correct. And that is all technical. It's not fundamental. So two, things here. You have technical analysis, you have fundamental analysis. Technicals kind of drive the market when there's no fundamental information or no massive fundamental information. Sometimes technicals can even take over, and we've had some reasons to be nervous in this market for a while here now. But really, when you analyze it all, there's not, some major financial crisis here looming. There's not, so oil was a problem back in 2016, at the beginning of it when they were hitting it. That was a fundamental catalyst. Oil prices were getting too low, and it was bringing down all the oil stocks. So they're going to start spill over to the financials because they're worried about exposures, a lot of different reasons. Right now, I don't see anything like that. I'm just going to say, okay, this is going to be the reason. But I'm just saying that stocks are frothy, and it doesn't always need a reason to go down, a fundamental reason.
All right, 15 minutes. Let's get to
We're not talking individual stocks. That was my little rant.
Let's talk about something.
You just look at the charts, and I'm just saying that stocks look a little bit frothy still, and they've come off, but there's still some froth in there. So caution is my word.
All right, let's go ahead and look at Nike. NKE reported yesterday after the Dow moved up ahead of it a little bit. Then they came out reported a Q4 EPS of 60 cents versus a 50-cent estimate, so a 10-cent beat on that. Sales of $8.7 versus $8.63 billion, so a nice beat there on the Q4 numbers for Nike. They say inventories are up 4% as of the end of May. Q4 revs up 5%, net income up 19%. They saw double-digit growth in Western Europe, Greater China, and emerging markets led by the sportswear and the running categories. They're also going into Amazon in a limited amount. Dennis.
Lots in this conference call. So Nike got a lift. And then in the conference call, Nike was trading around 54 to 55. Conference call came on, they started talking Amazon, and then the stock. I was watching as the Amazon comments were coming out, and they were just buying the hell out of Nike. As soon as they mentioned Amazon, they started buying the hell out of Nike. And you're right, it said limited, so it's not, they're nibbling in here. That's what I was reading, I was like, why are they, buying it up $2? But Nike literally went from like 55 to 57 just as they started talking about Amazon. So it blasted off. And actually, if your funny thing is, you look at Foot Locker, during that time too, FL, I was watching it. It started actually getting hit during that time. Started coming back by the end of the call when they were saying more limited, as those words were saying, it's okay. Well, we're not going to all of a sudden stop selling our shoes in Foot Locker and selling it all on Amazon. They're just nibbling into Amazon here. So Foot Locker actually started bouncing back by the end of the call. But there was lots going on. Sometimes the conference calls are very market moving. 80% of the time, they probably don't affect the stock much. But, everybody's listening because they want to see what they were going to say about Amazon. As soon as they started talking about Amazon, Nike started popping.
And
NKE.
I think
Johan Smith was wondering which stock we were talking about. NKE.
Yeah, I think the logic there is, some is better than none, right? They were resistant for a long time. Nike was for selling on Amazon. They were so resistant. Some selling on Amazon is better than no selling on Amazon. So I guess we'll see where this goes going forward. But you were saying you mentioned Foot Locker. It did hit Foot Locker. But what about Under Armour too? I mean, the Nike and Under Armour are.
It really wasn't. Yeah, and Under Armour actually is trading up in sympathy. But Under Armour, it's different. So Under Armour is actually competing directly with Nike. I mean, they're making different products, right? They're so where you got Foot Locker, Dick's Sporting Goods, are actually got the stores where they're physically selling the Nike product. So I don't say Under Armour is, affected in the same way because of this Amazon thing. Because the worry is like, holy cow, Nike's going to, all of a sudden be putting all their stuff on Amazon, all their shoes on Amazon. Nobody's going to come to Foot Locker to buy the stores anymore. Nobody's coming to Dick's Sporting Goods to buy the Nike products anymore because they can buy it right on Amazon. As opposed to Under Armour, which is actually just making, obviously, competing product with Nike. So that's the difference,
right?
In my opinion.
Right. But overall, I mean, pulling up the Nike chart one more time there. Great report. Great report for Nike. And you know what?
just before you, it
Yeah.
kind of fits a description too, Spencer, of stocks have been out of favor, have been, actually responding very well to earnings reports as of late. And we've been talking about that. And Nike, here it is, it's good earnings report, good numbers, good stuff said, but it's not surprising to me that it responded strong because the stock's been out of favor. And that's what we've been talking about. The dogs have been barking for a while. We say it every single day on the show. Seems like the stocks have been out of favor are the ones that are coming back into favor a little bit. Call them value stocks, call it whatever you want. But stocks that have had ugly years have actually been doing better, and the opposite before, it's going to be Micron, which we're going to talk about in a second here, which just reported a fabulous quarter, but stocks barely up because stocks are, money's been flowing out of those lately.
Yeah, now I was going to say, I think Nike needed that. If you remember the last earnings report, they got hit hard off of that one. So Micron, let's go over there. Let me pull up a 15-minute chart first. But Micron did report earnings, like you mentioned, Dennis. They reported Q3 adjusted EPS of $1.62 versus $1.51, sales of $5.57 versus $5.41 billion. So a great beat for both Q3 numbers. And they are expecting their Q4 EPS to come in higher than the estimate. $1.60 was the estimate. $1.73 to $1.83 is what they're saying they expect out of their EPS for the year. Sales coming in higher as well. So a great report all around from MU, and nothing in the chart.
Yeah, and you know what? It popped last night, and this just goes to show you it's all about expectations. When it was, I had this in my head at 355. I'm like, Micron's probably going to report a good quarter. But like, they've been hitting these stocks lately. So it popped up, and I actually shorted the stock. So it's like, why would you short a stock in a good earnings? Well, it's because I've been paying attention. And paying attention to stocks that have been running up have, even despite, having, good numbers. We had a horrible day in tech today. So all of a sudden, the stock's coming back to its highs of the day. I mean, a lot of people say, hey, thank you very much, I'm going to be selling. So, and that's, what I was doing last night. And actually, if you look at the after hours chart, I was getting short just under $32. I was able actually to bring that in the low 31. So I made a nice little point there quickly in Micron just off the bat. And then, eventually money started flowing in, and I know Micron's trading up here now, but tech is trading up here now too. But, if all other things being equal, Micron reports that quarter last week, Micron's probably up $2. But because they're all of a sudden not giving tech the love that they were giving 2 weeks ago or a week ago, Micron's, flat, or it's up only 40 cents on a fantastic quarter. So it matters what's going on in the overall picture of the sector as well. Sometimes matters more than the individual report.
I've got the daily up. Can you give us a little bit of a technical breakdown there on the daily?
So you're looking at the intraday chart?
No, the 1 year daily for Micron, or we can go intraday. I can go five day.
Well, it's just run. I mean, Micron has been incredible. Sean Udall was on the show early this week, saying, well, it should never been down to $10. So, because I cited that the stock's up from $10 a year ago, a year and a half ago, up to $30. It's been an incredible run here. I feel like you're late to the party. Sean's saying you're not late to the party because it used to be $35 back in 2015. It should have never been at 10, and now it's just getting back to where it should be. There's an argument there to be made too, but I just know there's a lot of people sitting on a lot of money in the last year. Sometimes those people want to take some profits. I feel like if I'm coming in here buying Micron for investment now, I feel like I'm late to the party because it's already run 200% in the last year. So it's going to run up another 200% from here. I guess, but looking long term. But it's going to run without me because I don't like to chase stocks, which is what everybody was giving me heat for yesterday. But that's what's worked for me, is not chasing stocks all the years. I look, for when there's a consolidation period, then I strike either long or short. Micron actually right now, just on the dailies, though, is in a consolidation period. So it's actually not a bad time to make a call here and say, okay, well, I think, it's a great report. It's going to drive us to new all-time highs. Or I think, the techs are all in a little bit of trouble here. And if the stock starts to get a pop today, maybe it's an excuse to take some profits because there's a lot of people still sitting on a lot of profits from MU in the last year. That's the ball. That's what the side that I'm on, is I'm in the profit-taking side in Micron.
Okay, were there any other earnings that you wanted to hit? I just saw those two.
I just want to hit, not earnings, but what about Cara, C-A-R-A? Because Joel, and I wish Joel was on today because this is one of his stocks that he likes talking about here. This thing's getting absolutely annihilated here today. C-A-R-A is giving back everything that it did in the last week and a half. So it's went from $18 to $28, completely gone here now, back to 18, right back to where it came from. I often do like that when they come back from where it came from. But give us the news here before I give you my technical analysis.
Well, they caught a downgrade there this morning, but the news was yesterday after the bell from who else? Adam Feuerstein from Now It's Stat News, that a study from Cara, it failed. This is a tricky one to read. Fail hidden in the fourth bullet point of the PR. For those interested, you need to read these PRs closely. So they did have a fail in the study that they tried to disguise, didn't quite disguise it.
And obviously, boom, stock's right back from where it came from. So, couple things here. One is horrible news. But the other thing is it's trying to hold at the levels where it had all of, from June. We had lots of support here in the 17 handle. If we look at the pre-market trading, do you have the low from last night there, Spencer?
Yeah, I can get you that. The low in pre-market was 1720.
I mean, that's right in the ballpark where it was trading for basically the entire last couple of months. So it gets all this froth, flies up, on possibly, rumors that it's going to be good news, not good news, comes right back to where it came from, right in the whole 17 handle. So now I look at it and saying, okay, well, if the stock can, hold this whole 17, 18, then you got a shot. Starts taking out 17, then I get concerned. But, I think, there's going to be some buyers here. I think there's going to be some shorts that are bringing in the shorts here between 17 and 18. And I think you're going to find some buyers between 17 and 18. So I don't mind the level between 17 and 18.
All right. What about the trading yesterday in Blue Apron? This was interesting. Brent and I were watching this guy at from 9:30 at the open and when they were opening trading, and it looked a little bit like uncomfortable, right? I mean, it was very late to open, right? It was late to open. They kept getting indicated lower. At first it was 15 to 17, then it was 10 to 11, then it was 10, then they opened right around 10, I believe, right? And
was 10 the IPO price too?
Yep. And I think 10:15 was the open. But
10:15 was the open, but what
I'm sorry,
was the actual IPO price?
10 was the open, and then 10:20. Here, let me find it real quick.
Find the actual. It's usually a whole number. That's why I wouldn't be.
Yeah. I think it was 10 and a quarter. It was 10 and a quarter, or 10. Don't quote me on that. But
I just wonder because 10 got defended so much
yeah.
that I without even knowing it. Without even knowing, what the actual IPO price
Brent's
was,
saying it was 10.
It looks like it was 10 to me.
Yeah, Brent's saying it was 10. So it was 10.
It's funny how this works, Like I don't even know, and I don't follow the I haven't been following the IPO, so I didn't even know that it was $10. But I look at the chart from yesterday, I was like, I bet you it was 10 because the thing opened right around 10. It came down at 1 o'clock, tested 10, bounced off it, tested 10 again at 3 o'clock, bounced off it, and then consolidated and was holding at 10 as the underwriters probably massively defending that 10 level. Needs to hold the 10. Sometimes the underwriters will come in. It's 10:08 here this morning. It's trying to hold that level. Starts taking out 10. That means the underwriters backed off. And then you start to get concerned that, hey, this could have a little whoosh out there. There's a lot of traders probably buying it off 10, saying the underwriters are going to defend it. If it takes out 10, look out below.
It was kind of awkward. The CEO was on CNBC, when these big stocks IPO, and they have the CEO on when the stock is opening, but the stock just wouldn't open. It wouldn't open, and they kept dragging out this interview, and Faber was, trying to stretch, and they kept him on for a long time, and they grilled him pretty good too, and he held up, I thought, pretty nicely. He took it on the chin, and gave some good answers, but it was just awkward to watch for me. I felt like I was watching a slow motion train wreck there, and to go from $15 to $17 in one day, that was a few days ago, and to go from 15 to 10,
and nobody coming in here buying it.
No.
So I don't know anything about the fundamentals of the company, but I'll just tell you that looks still heavy here. Jimmy A pointing out that it broke it after hours. I did notice it was trading below 10 last night, but underwriters aren't trading after hours. So just because it breaks something after hours is kind of meaningless. We want to know if the underwriters are going to continue to defend the 10 level. So I want to know if it breaks it intraday here today, and not 9.99, then it's back bid 10. I want to say like 9. I'll call it break like 9.85. Okay, it looks like they're gone. So now are we going back? Are we going down to $9 or $8 or $7? I don't know. So I'm just saying 10 needs to hold. It's a technical. It's everything. It's everything. We saw it on Facebook Day way back when it's had its IPO. They held the 38 the entire trading day. They let it go from 38, and then it collapsed and went down 37, 36, 35, and actually, believe it or not, Facebook went all the way down a few months later to $18. So, that's one thing. When the underwriters back off, then all that selling pressure can come in, and other people who are saying, "Oh my goodness, underwriters aren't defending it anymore," they're coming and they whoosh it too. People who bought it yesterday, people who are buying it here this morning, thinking they're going to defend the level, they may continue to defend it. Support is support until it's broken. 10 is everything for the stock.
If you want a teaser on the fundamentals, they drop 18% of their sales on marketing, and they lost $50 million last year. They're not being profitable is not news for these companies, obviously, but they would have to acquire 4 million new customers annually just to break even. And then this report on top of
what is it that they do?
You don't know Blue. You haven't seen their ads.
No,
Blue
tell
Apron?
me this.
Oh, they are a food delivery service. Talk about bad timing. They are a food delivery service. You can order like pre-planned recipes, and they will deliver the recipes to you, and then you cook it yourself. So it's like you don't have to meal plan. The meal is already planned. You just get it. You get the food and cook it basically.
I guess if you don't know what the hell you're doing, maybe that would be good for something like me. Well, my wife's a pretty good cook, so I'll go with her.
Well, okay, put it this way. When you were growing up, did you ever eat TV dinners?
Oh, yeah, all the time.
It's the same thing as that.
I lived on those things.
Right. Okay, it's the same concept as a TV dinner. It's just you got to make it. You got to actually make it from scratch. But they give you all the ingredients, and
Why would I want to do that?
Because you don't want.
I'd rather just heat up the TV dinner in the microwave.
Because you don't want to. Because you don't want to take the time to go shop for your meals and plan.
If I don't want to take the time to go shop for my meal, I don't want to take the time to cook my meal. I'm just a busy person then.
Yeah, that's a fair point.
That's what I'm saying. Okay, I don't like this company at all. No, I never did like it. I don't think because of the way that's trading here at the $10, but.
And
anyways, 10's the number. I don't even care about the fundamentals. Takes out 10. I don't like it at all. If it holds 10, well, it could bounce. So 10's the number. Gotta hold 10. Doesn't hold 10. Look out below.
Food delivery company IPOing 2 weeks after Amazon buys Whole Foods. Not great timing. Okay, A31 Dennis. Can we get a quick and balanced teaser?
Sure. Banks again looking strong here, so it's funny. It's like a little bit of a repeat from yesterday, although we're not seeing the weakness here in the overall market. JP Morgan, 28,000 to buy. Citi, 71,000 to buy. Bank of America, 160,000 to buy. It was disclosed that Buffett's turned his preferred stock into common stock for Bank of America. It probably doesn't hurt it. So the banks are looking with buy and balances here. Disney, 40,000 to buy. That's a standout. We haven't talked about the House of Mouse for a while. Just trying to look if any other ones stand out. Abbott Labs, 35,000 to sell. General Electric, 45,000 to sell. Verizon, 49,000 to buy. Merck, 30,000 to buy. Bristol Myers, 26,000 to buy. Mostly buy and balances. I think you're getting a little bit of a bounce morning here. Sometimes these bounce mornings get sold. The one other thing, which we're talking about, downward dog, we're at the end of the quarter, and sometimes you see strength in the end of the quarter. So it's a tricky day. I would say if we weren't on the end of the quarter, I'd be probably selling this bounce early. I'm a little bit cautious, though, because sometimes buyers will continue in these stuff as you get money managers, moving around and doing their window dressing. I almost want to be, I would, a nice setup would be as if we rallied and held the rally most of the day or even rallied more, and we were able to sell at the end of the day. So I think there's two factors here. I think people want to take some profits here into this rally, but I think you're going to have money managers that actually want to put some money to work because it's the end of the quarter. So it's a little bit of a tricky day.
We got a couple minutes before our first guest, our only guest of the day, Mark Yesko. Anything you want to cover between now and 8:35?
The only other stock I had on my list was a takeover. WMAR is getting taken over by West Marine. This private company, I believe.
Yep, getting taken over by Monomoy Capital for $12.97 a share.
There you go. It's $12.71 bid here in the pre-market. Last night it was actively trading at $12.55. Well, not even actively trading, but it's bid heavily, $12.71, offered at $12.95. Risk arbs have come in here and look like they're putting a 10-15 cent discount on this deal, but it looks like a done deal. And the only other one, Whole Foods, held 42 yesterday. It tested it, actually, WFM. If you look, we almost hit Whole Foods. We did. We hit it right on the kisser, $42. So 42 is getting defended there, 42.07. So all that premium that was in there that people were speculating there might be another suitor is now gone. So now people are just saying, okay, well, it looks like 42 is the price. I get concerned, though, that if, like we were saying before, if you get Trump tweeting something out or anything like that, because you gave the good point that he doesn't like Bezos. So you never know. If Trump was to ever tweet something and say, I don't know, I'm going to come in here and block this deal because Trump gets loose on his Twitter. Although he's been calm on his Twitter lately.
No, he has not been calm. No. But that's the topic. That's a topic. Yeah, calm with the stocks. But didn't that happen when I said that on like Tuesday or Wednesday? Didn't he come out and say something on Wednesday or Tuesday morning about Bezos?
He didn't say about the Whole Foods deal, but he said about Amazon.
Yeah,
he don't like Amazon. He don't like if he said something, and we're just that's why I'm saying coming here, there is some risk. 42.10, and I'm not saying the deal's not going through 42. I think it is, but if he was to say something like I'm blocking this deal, or anything to do with the deal in a negative fashion, Whole Foods could be $40 on that tweet. So that's the word of caution to the buyer here, 42.10.
Yep, for sure. Okay, 8:34 now. We got to go for our first guest, Mark Yusko, CEO, CIO of Morgan Creek Capital Management. He's really, really great. We'll be right back with Mark. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick. We're on the line with Mark Yusko, CEO, CIO of Morgan Creek Capital Management. Mark, how's it going today?
Good. Thanks for having me back. Good to be with you guys this last day of June.
Last day of the quarter, last day of June. What was your reaction to the market yesterday? A bit of a sell-off we had.
Look, I mean, we felt for a while that markets were overvalued, particularly the big tech stocks. We think it actually looks a lot like 2000 in that respect. So not surprised. It's interesting. The market went down a lot 3 days ago, went up a lot the next day, and then went down a lot yesterday. So I think the volatility is going to continue. And Soros has a great line about this. He says you can tell a shift in trend is coming when the intraday or the day-to-day volatility gets very high. And it's kind of like a phase shift, when water molecules start vibrating very rapidly when they go from water to steam or from water to ice. So I think a shift is coming.
And so now, how do you kind of negotiate yesterday's trading action with the fact that we're at the end of the quarter? How do you kind of consolidate those two in your head?
Well, it's interesting. Normally, I say normally, it doesn't happen every quarter, but a lot of quarters you get a phenomenon called window dressing, and that's where people buy what they wish they would have bought during the quarter, so it shows up on their quarterly statement, and that normally exacerbates the current trends. So I actually would have thought yesterday and today would be big buying days for big tech and the things that have gone up a lot. When that didn't happen, and you actually got the opposite, and at one point big tech stocks were down 2, 3, 4%. That's probably concerning, because that window dressing is going on, and so for those stocks to be down that much despite a lot of buying pressure, that has some information content.
That's a great point there, Mark, and I was actually just making that point just before you came on the show here. This day sets up as an interesting day because, like you say, there might be that upward pressure from the window dressing here all day. We're getting a bounce here, but I feel like it's heavy. I feel like we're heavy in a lot of those stocks, even like looking at, everybody wants to go to NVIDIA, but I was just looking at the chart of Apple here from the last month, and we had the big whoosh day when Citron came out with a negative report on NVIDIA, and it brought down all the momos that day. Really, for the last 3 weeks. We've kind of just been digesting that original move, but we've hung out here so long that it makes me start to think like maybe there's more pressure here coming again. So I'm torn here today. Like part of me wants to come in here and say, okay, sell the bounce, but I'm scared of the potential window dressing that could occur here at the end of the day.
Yeah, look, I think that's exactly right. And the first half hour of trading is just treacherous. In fact, we actually have a rule internally. We just don't do it. We don't trade in the first half hour. You got all your market orders from the previous night. You've got all the reaction to the overnight news. You've most of the morning's got a gap that you have to deal with and try to process. So we kind of really look for the last half hour of the day to confirm or deny our thesis. That's when the big money comes in. The institutions come in. They've waited all day to watch the market action. And so I think you can tell a lot more from what happens at the end of the day than the beginning of the day. So, based on that, there was a little bit of buying pressure yesterday, late afternoon, partially in response to, how amazing was it? At 1 o'clock, the market was absolutely in free fall. And Bullard comes on TV and says, well, no, we didn't mean we were going to raise rates again. Everything's fine. Everything's fine. Just go back to buying stocks, please.
So, Mark, if you're looking at this, what is your outlook here for the next few weeks? Like, we seem to have the same opinion here, at least, what we're feeling here. But do you feel like, there's been this, long-term buy-the-dip mentality that's in this overall market? Money managers may be underinvested coming in every time there's a dip. Eventually that, we know that story could end badly there. But do you feel like we're at that point where, buy-the-dip might stop working here, or is it just going to work again?
Here's the interesting thing. Summertime is usually pretty boring, right? Most people are away. I'm driving in this morning. Congress is recessing for 6 weeks, and a lot of people go to the Cape for a couple weeks, and people just aren't around. I went to Disney for 3 days earlier in the week with my little guy. So people just aren't around, and that tends to make volume light. Now, the danger of these light volume days is it does make them more subject to these melt-ups. And what I think you'll see over the next few weeks is a whole bunch of announcements on a lot of these Momo stocks. And my guess would be Goldman or Morgan or somebody will come out, whoever's going to get the underwriting for the next equity raise for Tesla, and they'll talk about how great it is, and they'll put out a big price target, but no one will be around. Excuse me. No one will be around, and so you'll get a short squeeze because there's a lot of money short that stock, as there probably should be. And I think the same thing's going to happen in some of these other big tech names is, Citron came out and put the negative story on NVIDIA. Well, someone's going to defend that because they want to raise them more money. So my guess is you'll get some sort of news on that stock, and there'll be a lot of people who jumped short, and then they'll have to cover. So I think what happens in these summer doldrums is usually a lot of big moves up and down, and by the end of it, not a lot of activity. That's why the sell in May and go away and come back on St. Ledger's Day, was initiated many years ago. I actually have a little bit different view, which is I think we're in the last phase of a euphoric bubble that ends at the end of the summer. And I would not be surprised at all to see, and I actually wrote about this in January, I would not be surprised at all to see the market rocket higher here from kind of 2,400 as high as 2,800 by the first week of September. And then we get the crash. I actually believe a crash is coming. I believe it's going to be equal and opposite to the run-up. I think the run-up has been, kind of silly. I think we're at silly valuations. People keep trying to say, well, we're not as bad as we were in 2000. To me, that's like saying, well, officer, I'm not as drunk as those two guys passed out in the back seat. Someone had to drive. Just seems silly to me.
That's a pretty good analogy. I like that.
That's funny, and it's funny because I just actually said that before you came on the show
exact same
20
thing.
minutes ago.
That's so funny.
Well,
I promise I wasn't stealing all your lines.
We're not as bad as we were in 2000. I just said that 20 minutes ago.
No, sorry. No offense.
No, it's all good. It's all good.
That was good. You couldn't have scripted it better. All right, Mark. So what pockets of growth are you eyeing then? In the market, are you looking domestic? Are you looking emerging? Are you looking Europe?
Yeah, look, in the U.S., we believe that healthcare and biotech are some pretty interesting sectors. They just got beat for 18 months following the Hillary tweet, and they were cheap. And we actually said coming into this year, one of our 10 surprises was that healthcare would get discharged from sick bay and would be one of the best performing sectors. And what people aren't following is equal weighted healthcare is actually the best performing sector this year. Not on a cap weighted basis, it's number 2 to tech, but on an equal weighted basis, small cap healthcare is actually doing really, really well. So we still like what's going on in healthcare and biotech. We also think there's some deep value opportunity in energy. There you have to have a view on oil, and we do. We think oil is going to stay locked in a $40 to $60 range. So when it's closer to 40, you should be buying. When it's closer to 60, you should be selling. So we do think there's some things to nibble on in the energy space. Beyond that, we're looking outside the U.S. We think people should have twice as much dedicated to emerging markets as they do developed markets today. You always want to skate to where the puck is going, not to where the puck is. You think back to 1899, there's a great chart floating around the internet. Chart in 1899, the biggest market in the world was the UK, 25% of global market cap. The US was 15. Had you been overweight the UK versus the US for the next 100 years, it would have been a bad trade because now the US is 53% and the UK is sub 10. So what you really want to do is say, well, what's going to grow the most going forward? And I'm not sure of a lot, but I'm sure that 1 in 3 people in Europe disappear between now and the end of the century. 1 in 3 people in China actually disappear between now and the end of the century. 1 in 3 people in Japan disappear. The U.S. stays flat, and Southeast Asia grows by about 1 billion people, and Africa grows by 2 billion people. So all of those things tell me that I want to be overweight emerging markets. And the thing that gets me most excited is what's going on in China and India around this OBOR, this One Belt, One Road project, the recreation of the Silk Road. What they're doing, which is just absolute brilliance, is they're shifting the center of the universe back to Eurasia, where it was for 1800 of the last 2,000 years. And countries like Pakistan, which has been on a tear, is benefiting from this. Countries like Egypt and North Africa, the Middle East, are going to benefit from this. You saw Saudi being put on watch list for inclusion in the MSCI indices. You saw China get included 2.6% in the MSCI index. How silly was that? The second largest market in the world, China A-share market, had a 0 weighting in equity indices around the world. That's just silly. So the buy pressure on Chinese stocks, particularly A-shares, over the next decade is going to be massive. So we think emerging markets look very interesting. And then Japan and Europe, I think there are some cheap stocks in Japan. I think there's some great companies like Nintendo and Sony, which are just crushing it. And then Europe, we think it's a little overdone. People got all excited after the French elections when Ms. Le Pen didn't win, although they haven't really thought about what Macron means. I mean, he's a 39-year-old guy with very little experience, and to say he was less bad than the other 2 candidates seems like a bad way to pick a president, but I guess that's what we did here in the U.S. too.
I actually wanted to ask you, about the MSCI and the China inclusion, which, what was it, 3rd time's the charm, 3rd or 4th time's the charm, so they're finally in now.
Mm-hmm.
It seemed like mostly what's driving that is the Chinese tech sector. You got your Baba, you got your Tencent, you got your Weibo, your Sina, et cetera, et cetera. Is there any other areas of growth that you see? Well, you mentioned the Silk Road project, but I guess what was your reaction to the MSCI finally including China A-shares, and how do you see that specifically impacting China stock market in the near term?
Yeah, look, I think the A-share market is going to do well, and there are ETFs like ASHR that you can buy to take advantage. I do think that if you dig a little deeper, you can find some of the industrial companies and commodity companies that are going to do very, very well. One of the things that people aren't really paying attention to, which is interesting, is there was a group, I think at Bloomberg or someplace, that wanted to prove that the Chinese were overstating their growth. And so they created this index of economic indicators like electricity usage and rail car loadings and port shippage, tonnage, and they wanted to show that China was manipulating their data. Except all the things that they put together said that Chinese GDP was growing about 11%. instead of 6.9. And they're like, maybe they're understating. Maybe they're manipulating it the other way. I'm like, oh, come on, guys. Of course, the problem with Chinese GDP is try to count the economic activity of 700 million rural farmers. You'd get it wrong too. So it's not a question of what the actual number is. What the question is it rising or falling? And all indicators, and you saw the indicators come out last night with both the industrial PMI and the non-industrial PMI both rising. China's actually getting better, not worse. So we think there's tremendous opportunity. I think the A-share market is probably the most undervalued relative to other big names like Baba and the others, which are probably more fairly valued after running, 50-60% this year. I still think the long-term view on Baba is fantastic. I think it will be the most valuable company in the world probably within 3 or 4 years. I actually said that on the day of the IPO, and I thought the reporter was going to smack me. She laughed so hard. But I think it's going to happen. So we're pretty bullish on China overall.
All right, Mark Yesko, CEO and CIO of Morgan Creek Capital Management. Mark, thanks so much. We love having you on. Have a good weekend. Have a good July 4th, and we'll be in touch.
You too. We'll talk to you guys soon. Take care.
Thanks, Mark.
All right, 8:50 right now. Dennis, anything changed in the S&Ps in the last 50 minutes?
Well, you know what? TLT started leaking here. We were up on TLT when we started the show. Now we've turned around and we are down 50 more cents on the TLT. We're actually seeing a repeat of yesterday morning, believe it or not. I know we're still up here on the S&P futures. I know financials are still strong, but look at the Qs. The Qs have now went into the red. So we have now lost stocks like NVIDIA. NVIDIA is now in the red. It was up over $1.50 this morning, now trading in the red. Stocks like Apple have now moved to the red here. We're seeing stocks that are defensive starting to get a little bit weaker here too. The utility stocks are moved into the red here as well as TLT has went down. It's a repeat of yesterday morning here. So that's
so what does that tell you? What does that tell you?
It's telling me that the flow is not done yet. It's telling me that there's still people who are sitting on some profits in a lot of these Momo names that are nervous and they want to book those profits here, possibly before the end of the quarter. So, the end of the quarter makes me think that possibly these stocks could show, even like Mark was saying, that would put some upward pressure. But I think there's so much selling pressure, it's actually countering it. There's more selling pressure than there's buying for the end of the quarter. So I'm nervous. I'm nervous to own all the stocks. Same thesis I was giving earlier in the show. I'm nervous here in stocks like Apple right now. I'm nervous here in stocks like NVIDIA right now. I'm nervous here just because it's showing that people are sitting on some profits. I mean, put it in perspective. NVIDIA in May, so we're going May 9th, that's a month and a half ago, was a $102 stock. Still $146 a month and a half later. There's a lot of people sitting on a lot of profits here. It's starting to look broken, the chart. So that says, 146. Why couldn't NVIDIA not come back to a 50% retracement of the move? So if Joel was here, he's really good at the math. Maybe we should call Joel. 102 up to $168 is a 66-point move. Take away 34 points of that, so you're at about 134, 130, 130, $135. It knocks another 10 points off the price of NVIDIA. That's just to get back to the 50%. So I think there's some nervous people out here that are sitting on some money right now, and I think they might overpower the buy the dippers.
All right, I am going to call Joel, but while I do that, why don't you give us a quick look at notable ratings changes? Yeah,
so ratings, there was a couple. BTIG had a note here. I'm getting trades here. BTIG had a note. Bluebird Bio, BLUE, downgraded, and also Celgene downgraded here this morning. Biotech has been on an incredible run here. We know that, but it's cooled off the last couple days. All the stuff starting to move with each other. Celgene has run into a brick wall up here at 135. And it's funny, if you go out to the weeklies and you go out to the monthlies, actually got to go out to. This is the area we started to struggle back in 2015 as well. So not surprising when Celgene went from 115 to 135 in a month. That it starts to find a little bit of resistance. So it's starting to run into a brick wall. It gets a downgrade here today. It's down a little bit here on the pre-market, which is somewhat concerning, but at the same time, there's still obviously, some buying pressure below on these stocks as well. Bluebird Bio's had a really impressive run. Ran from 80 up to 120, but it's broken more now. It's now well below the 110, and I start to think of, the 2 day ago low when it got down to 102.50. Yesterday got down to 106. I think, we might be wanting to try eventually to see if we can get this back down to single digits or not, but that chart looks a little bit broken to me too. Other notings, just Walgreens WBA was upgraded at Needham here today. That's maybe after the Rite Aid deal there yesterday. And then DHI is getting an upgrade at Raymond James. Those were the big notable ones. But do we have Joel here?
I don't know. Do we have Joel?
Hello?
Hey, Joel. What's going on?
Hey, how you doing, Spencer?
Doing well. Dennis had a question he wanted to ask you.
Are you on the road right now?
Oh, that wasn't
I'm
it.
on the road.
That wasn't the question.
I have the goldfish memory. Ask my question because I don't even remember what question I want to ask.
We were talking about oh Jesus Christ.
Now we have both of us.
We were talking about Baba. We were talking about Baba. All right. Erroneous. Joel, you had some points you wanted to raise.
Right. Well, first, Spencer, have you ever read The Last Shot by John Feinstein? Have you ever read that book?
I've read a few.
Final Four Mystery.
Yes, I have.
Okay.
I have read that book. Why?
I'm listening to it right now on audiobook, and it's great. It's going to make this 8-hour drive go by like nothing. But I just thought Dennis and I had a little conversation. We were talking yesterday about, chasing stocks and, the verbiage behind it. And I think I could kind of see both sides of where people are coming from here. First of all, I mean, if you did see, a lot of the stock was talking about VRX, right? And as you can see what the stock did yesterday, it traded up over $18. Then it traded down under $17, and I think it even ended up down on the day. So, yeah, there would have been opportunities in buying it that day, but you also could have bought it out, above 18 and not had a good trade. So I just wanted to point that out. But I wanted to say, like, when Dennis talks about chasing stocks, okay, he is talking about his strategy for the day. And, he
not
wasn't
always.
buying VRX.
Not always, but
okay. Well, that for the day. Well, the thing I'm going to allude to is you said, you missed a breakout at 14. If it comes back down to 14, maybe from a longer term play, you'd be interested in it.
Yeah.
So, I mean, from that perspective, I want to comment on that. And then when people mention in the chat, or AMD went from $1.50 to 15, or VRX went from 264 to $9. Well, yeah, you see those big moves after the facts, but there was a lot of, up and down gyrations through it that, maybe you couldn't take the heat on. But I just kind of wanted to comment on both sides of that argument from yesterday.
I mean, I think when I'm speaking, I'm trying to speak mostly on the show to two. We try to do a little bit. We try to do, I got my short-term day trading, I got my swing trading, I got like my long-term investing. I think when I'm speaking with VRX and I'm saying you're chasing, I'm speaking more from a swing trading perspective, maybe not from a long-term investing perspective, because you can say, okay, well, I don't care about $3 here because the stock's either going to be 50 or it's going to be nothing. And that might be the case. But I'm looking at it from a swing trading perspective and saying, look, a good swing trade is 15, 20%. Well, the stock just ran 4 points on 14. It just ran up 30% here in a matter of 5 days. So I'm not chasing it here now from a swing trading perspective. I missed that train. So if I was investing in the company, maybe it's a completely different story. Long-term investing, you're like, well, I don't care about this 30% because I'm going to go for 100% or 200%, or I'm going to lose my shirt. So, that's the difference is I'm kind of looking at it from a swing trader's perspective and kind of from a day trading perspective as well. But, when stocks run 20, 30% in 3-4 days, I feel like that is, the train has left the station. And that was what the point I was making yesterday when a lot of people weren't pleased. Even though with my Twitter account, people weren't pleased that I was saying, I was chasing RX. But
and what does our our Tuesday guest say, about stocks like this, Too high to chase, too hot to short. I mean, there's not always a trade in everything when you look at it from that perspective. So, yeah, the other thing you said was, hey, if you're great hopping on, momentum trains like that and you've got a good feel when to get out and take a profit, then go ahead and do so. But the other thing I said to you, Dennis, was back when we had the trading room at Bright and a bunch of 20, 30 guys trading in there, if there was a lot of news on a stock and it was the hot flavor of the stock, I didn't necessarily want to play that one that day because, there are bigger boys out there with bigger agendas, and it's better to know the stocks you trade, be comfortable with them, and, not fret over, missing out like moves like that.
That's the one thing, and the point that when we were talking yesterday too, is people get so upset that they missed moves that they make illogical decisions afterwards. They'll say, oh, the stocks went up 20%, now it's up 30%. I got to get in now. I can't miss the next 20%. What they end up doing is they end up buying the high. And you just got to say, okay, The best thing that I do a lot of times is nothing. The best thing I do a lot of times, and that's 18 years of experience, is saying, I know there's going to be another opportunity tomorrow. You can say, well, Vera, there's not going to be another opportunity for 30%. Yes, there is. There's going to be more opportunities tomorrow. There's always another trade. We got 6,000 stocks listed on the, just on the U.S. exchanges alone. There is tons of different opportunities there. If you miss the train, you miss the train. Hop on another one because there's other setups there too. There's no reason to get upset that you missed something and then jump in, and end up chasing it up and then end up getting hurt. So wait for your setups.
You could always do the revenge trade too, right? If you miss it, and you can get mad and then you try and short it, and then you end up even in more trouble. So, what are the spoos doing?
We are up about 4 or 5, but we're starting to leak here a little bit. We actually had a really good rally this morning, but tech is now in the red. It's kind of a repeat of yesterday there, Joel. So could be an interesting day, especially end of the quarter too.
I was hoping for see if we got a little pop off the open. I don't know. I don't think we'll get down to yesterday's low. It's pretty far down there, but. Just wanted to check in with you guys and make sure everyone has a great day.
All right, Joel. Thanks for checking in. Good to know that you're listening to an audiobook and not to pre-market prep. But we'll let that.
Yeah, what's going on?
We'll let that slide. All right.
I'm in Emily's car. It took me a while to figure out how to get the audiobook on, so I'm not going to turn it off.
Okay, all right. Well, have a good one, Joel. That is it for us. It's 9 a.m. somehow already. We missed a couple. I wanted to hit on Hain, Celestial, and we also had some M&A this morning with Parkway. Parkway Canada Pension Plan Investment Board is buying Parkway for $23.05 a share. Want to get that out there real quick. But that's it, though. 9 a.m. Looking ahead to next week's slate of guests, we've got a half day on Monday. Market will close at 1, but we'll still be here. In our usual spot, so we're going to be on with Ricky Horner and Anmal Singh from LiveTraders.net. We've got Nick Shaheen next week, Michael Pachter next week, Aidan O'Leary, who is from the Hack ETF, Rod Casilli, he's a trader, going to join us, Ivan Feinseth from Tigers Capital Management, an analyst there. So great slate for you next week. As far as today's show and all of our past shows, you can catch them on the Benzinga TV YouTube channel or on our podcast on iTunes, SoundCloud, and Stitcher. Don't forget to like us on Facebook and follow us on Twitter. Hope everyone has a good day and a good weekend. We'll be back with you folks on Monday. For those of you taking the day off, have a good 4th of July. We'll see you folks when you get back, but have a good weekend. For those who will be with us, and again, good luck out there.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.